Hello everyone, welcome back. If you're watching this, you're probably wondering what's actually going on in the Spokane real estate market right now. Not the national headlines, not the doom and gloom we all see on the news, the actual numbers. So that's exactly what we're going to go over. So today we're going to cover the MLS data, what's happening with interest rates nationally, and what all that means for us here in Spokane. I'm Zech with Rios & Co. Real Estate. Let's get into it. So first, the number everyone wants to know, interest rates. Right now, the 30-year fixed mortgage is sitting at 6.4 to 6.5% range nationally. A year ago, we were around 6.76. So we've come down. That's made a real difference in monthly payments for buyers here in Spokane, but not a huge difference. Now, why haven't rates dropped further than that? That brings us to the Federal Reserve. At the end of April, the Fed held rates steadily for the third meeting in a row. They're keeping the federal funds rate at 3.5 to 3.75%. The reason they're holding steady is because of inflation mostly. The most recent consumer price index came in at 3.3% year over year for inflation. That's still well above the 2% target that they have. A lot of that's being driven by the conflict in the Middle East and energy prices. There's also a leadership change happening right now at the Federal Reserve. Jerome Powell's term is ending and Kevin Warsh is expected to take over. Markets are paying really close attention to that transition. It'll be interesting to see what happens there. What does all that mean for mortgage rates going forward? Most forecasters expect rates to stay in this range or ease slightly maybe by the end of the year. Gradual movement, not dramatic drops, is the name of the game right now. That's the realistic picture. Okay, let's get into the Spokane specific data, starting with sales volume. Most recent data from the MLS looks really similar to how it did last year. Spokane closed 450 homes in a month. That's up 4.4% from 430 closings from the year before. Sales are up slightly, buyers are active, transactions are happening. Year to date, we are up 2.2% year over year. So the volume story is consistent. More homes are changing hands in 2026 than at the same time in 2025. That tells you the market has demand, but no drastic changes from last year. Now let's talk prices. Median sales price is $415,000, down 0.7% from last year, while the average sale price is at $459,000, also slightly below last year. On the flip side, the year-to-date median is down $750 only. Same period as last year, year-to-date average is down 0.4% from last year. So what does that tell us? Prices are flat. The median dropped less than $3,000 from last year. The year-to-date median is actually a little higher than it was at the same point in 2025. In my opinion, it's a wash. Demand is up a few points, and median and average have changed less than a point. It's a very stable market. National media tends to paint housing as either booming or collapsing. Spokane isn't doing either. We're seeing a normalization, a healthy market. Homes priced correctly are selling. Homes that overshoot are sitting longer. That's the market functioning the way it should. Let's talk about inventory, because this is the engine that drives everything else. 2.4 months of supply, up from 2.1 a year ago. A pre-COVID balanced market baseline was 4 to 6 months of supply. We're still well below this. Means still have quite a bit of demand. Inventory is up from last year. That's good news for buyers. There are more homes to look at, more options, and more room to be thoughtful about your decision when buying a home. But to keep that in perspective, a balanced market sits at 4 to 6 months of supply. We're at 2.4. We're moving in the right direction, but still low inventory environment overall. New home sales came in at 77, down from a total of 92 last year. Worth keeping an eye on. That could reflect builder caution in an uncertain rate environment, or simply a shift where buyer demand is concentrated. Not completely sure, but something we'll keep an eye on. One more thing about inventory is it's not evenly spread throughout the market. Low price ranges, especially like $350,000 to $450,000, are still moving very fast and very competitive. The higher price ranges have more inventory, and sellers are needing to offer concessions and be more flexible when it comes to their buyers. Spokane is really a collection of micro markets at this point. What's happening in one neighborhood may look very different from what's happening 2 miles away. It's important to have someone to help you that understands these micro markets, for you to reach out about specific neighborhoods. So let's bring this all together. If you're thinking about buying, you have more choices than you did a year ago. Rates are better than they were 12 months ago, and sellers, especially in the higher price ranges, are more willing to negotiate and offer concessions than they were a couple of years back. That doesn't mean every home is a deal, and the lower price ranges can still be very competitive. But overall, buyers have more leverage today than they did historically. If you're thinking about selling, the market is still working for sellers who price strategically. The demand is real, but buyers have more options now and they're paying close attention to price and value. Homes priced right for the neighborhood and conditions are selling well. Homes testing the top of the market are sitting and making price reductions. That pattern is consistent across the data right now. Seasonally, we typically see prices tick up through spring and into the summer, so the next few months tend to be a favorable window if you're considering listing. All right, so here's the Spokane market in a nutshell. Sales volume is up year over year. Prices are essentially flat, stable, not crashing. Inventory is improving but still below a historically balanced level. And rates, while not where anyone wants them to be, are better than they were a year ago. It's not a boom, it's not a bust, it's a functioning, healthy market, and the data is pretty clear on what's working and what isn't right now. If you have questions about a specific neighborhood, a price range you're looking at, or just want to talk through your specific situation, reach out. Happy to help. Link in the description, and if that was useful, hit subscribe. I do these updates regularly, so you always have a local read on what's happening here in Spokane. I'm Zech with Rios & Co. Thanks for watching. I'll see you next time.